Hi, welcome to our Easy Trade Update. This is Kim Watson speaking. Okay, I'm going to cover in a short while how to trade in low volatility markets. Now, this is a very brief overview of what we covered in our recent webinar. We do carry out these webinars. We will have another one coming up in a not too distant future. We don't always record them, and this one we didn't record, so I have, as I said, for those that had missed it, just on a very high level overview of what we did. It's going to be within a few minutes as opposed to obviously 20 or 40 minutes which we spoke for. So let's get on and look at the markets first though. So for those people just wanting a market review, here we go. So looking at the euro dollar, and we're very much at the moment trapped. I say trapped, it's sitting, and if I only put that on neatly, between here and here in a pretty tight range. What we need to see is a breakout of this range. I mean, it's getting to that sort of, actually, highlight that again. It's getting to that sort of situation where it's just sort of dashing between the 2 points, and at some point we could find it the old-fashioned box sort of type play in terms of when we do see the breakout. It'll probably run for the depth of this box here. Now, I still favour to some degree the upside in terms of we've got the monthly pivot above us, which is often hit pretty early on the month, or we get pretty close to it. Of course, there's a significant amount of key news coming out this week, which I'm not going to go into massive detail at the moment, but it is on our updates. If you go to the calendar page, there's a video. Oh, sorry, double click on that. There's a video within the page there that you can watch and see exactly what's coming tomorrow and Friday. But lots of news coming out which could move this, particularly Thursday's news is the key news, which could move the euro, and we could, as I say, run to the upside there. If we do break towards the lows here, well, I'd be looking for the sort of prior lows there at around about 134.85. I mean, from the picture you'd expect a bearish outcome from this, but there was talk about short covering today in terms of there's a fear of the short covering. Personally, I can't see on the order book massive short positions in terms of the overall book what's sitting there, so maybe it's just gossip and no action. It looks relatively bearish in terms of the move here. We were sort of held in by that 200 moving average. A break, as I say, break to the downside, I'd be looking for those prior lows there, just below 135 area. A rally to the upside, well, I'd be looking really for probably the pivot and the monthly pivot and that 100 MA as possible targets. Now, when you look at the shorter time frames, actually, is one thing I was talking about in our trading rooms today. Oops, in fact, I'm better off just showing on here. Perhaps not then. Let's just expand it up a little bit so you can see it clearer. And what we've been seeing here is we've seen these lower lows, and that just pipped it a little bit. Well, at least a double bottom there. But the most important thing is the MACD, and what we're seeing here in terms of it's effectively diverging with this move, which may suggest from this 4-hour picture we could see an end to this trend. I mean, the box I've drawn on the other chart is sitting here. As I said, probably looks a little bit clearer here, but you can just see how congested the market is at this point. But it's just a case of just waiting for that breakout. Okay, let's have a look at the pound dollar. Let's just go to the upper time frames first, the dailies. Again, I'm looking at this. I mean, we're still in this range I've drawn on here for several weeks back. We're sitting in this sort of big range. I'm still looking for some further downside overall. I'm expecting this sort of wave situation to work its way out at least down to that 166 area. Although we've got the monthly pivot so close, it wouldn't take too much to get a little pop up there towards that area. Personally, if I'm around, I'll possibly just subject to the situation at that point, but possibly be looking to short into this area to hopefully play back down towards that S1 area on the monthly pivots. Beyond that sort of area, where I'd be looking for, we've got these prior lows. Really, it's quite sort of dotted around a little bit. beyond that point. There's not a sort of a solid area until really even, well, it's all odd days. Normally we'll be contained by the S2 there, so I would at least expect it to possibly run down as far as that if it really does get a run. But certainly the first target I'd be looking for any short sort of setup would be this area of 166.32. Okay, just looking at the 4 hourlies, it doesn't really tell us too much more apart from I've been drawing little bits on earlier on. We had a wedge on this morning when I was looking at it into a bit of a wedge position. Did the breakout to the previous day's highs. Didn't get much beyond that, and it's just rolled over again. And currently, well, it looks like it could break into the lows, but again, when it's in a wedge like this, we often just see it running into previous resistance at the top here or support at the bottom. So it could go to either way. But as I say, my favoured angle for the cable is for a rally into that monthly pivot and then possibly some further downside. Certainly on the 4 hour position here, we haven't got the same sort of divergence or anything going on as we have with the euro dollar. Right, let's have a quick look at the yen, dollar yen. Oops, didn't mean to do that. There we go. Dollar yen is very range bound. We've really been running between 101.30ish and topping out in the last 6 weeks or so. About the 102.70, so it's a sort of range I'm looking at. To me, this looks like it's gaining some momentum, as we can see here, and this sort of movements here could push up at least to those prior highs, maybe in with the R1 area. If we can get a decent run, I wouldn't be surprised if we run back to 104 area. So that's what I'm looking at the moment. Any downside? In the short term, I'd just be looking at a sort of 102 area with the 50 MA in terms of some support if it comes down towards that way. But at the moment, as I say, I'm looking for it to attack these prior highs here probably, and see if it can actually push through. And any push through here would see us running up towards that 104. Right. Aussie dollar, some very key news coming with GDP figure coming out at 2:30 this morning, and this is I'm doing this at 1:30, so quite early in the morning. So we have got this that news to come out. If that comes out particularly well, we could push up and break through these highs here at some point, but certainly be heading towards well, as I say, the near-term highs, and maybe over the next few days pushing beyond the monthly pivot and upwards, maybe to the R1, S, or even towards the R2 there. Any disappointments here? And I'm just looking at this, and it's such a flat bottom here. A break of that low. We got the 200 right below. It hasn't been tested. We may provide a bit of support, but other than that, I can just see it breaking down from there, and the next sort of level of support area is round about just probably fractionally above this R2 pivot. And as I say, I think this GDP figure may point the direction. It has been in a very tight range over the last week or so. Okay, that's the market data. What I'm going to do now is just run through the slides. So I'll just pause this for a second. Okay, hopefully this will work okay. Basically, after the good news, I mean, we've seen a lot of low volatility recently in the markets. There is the good news in terms of after low volatility, we often see periods of high volatility. So it's not unusual in terms of seeing a market relatively flat for hours on end, and then all of a sudden taking off, and it may be news driven. It could be just the price just certainly hits a certain figure, and it triggers quite a bit of volatility. Our options into this market, how to trade it, there's numerous options. I'm going to look at just a couple of things here. As I've said here, after medium-term consolidation, we're getting some really big moves in the market. I've been looking at the hourly time frames, and I'm going to show you a couple of examples. I don't know how well these will show up on here, but certainly all I've been doing is very simple. I prefer the flatter the better. But where the price is just consolidating like this, all I'm waiting for is the breakdowns, and we're seeing some really decent moves. Now this was taken, and this was a slideshow, shot that I took literally for the webinar itself. But I mean, you can see on this, you just about see there's a 50 pip move there. There was another one which is probably just out of shot, went about 43 pips the next day, and this is a sort of price action we're seeing at times. Okay. There are times when it's a bit more choppy than that, but this is the sort of trades and the opportunities to be watching for. I'll just have a look at a couple of live ones in just a moment, but so here again, relatively flat, nice 42 pip move. There was one that's just off of shot really here, which again moved for about 23 pips. In fact, what I'll do there is just pause it a second and bring the chart back in. In fact, bring the chart back in, and I realise I have moved it up a little bit. Just going into a 60-minute chart now. You can see with cable it's been pretty difficult in terms of recent moves, but again there was this sort of very simple level here where price had been running across, and yesterday as it is now on Tuesday, we eventually did see the break of those highs, and it moved up quite a reasonable distance there into the previous high. So I mean, on a relatively flat market, it moved around about just over 17, 18 pips, nearly 20 pips on the break of those highs. As I say, that's not the best of all examples. I'm just looking on this over this current week or so, but again, there was this flatness along here. Let me draw it on. Just going to draw a trend line across the bottom here. Many hours just doodling along, and then sell off, and off it went. 7 o'clock in the morning it started, so it really sold off quite early there, but then just went for the day. And we are seeing, this is the sort of thing that we're seeing, and the opportunities there are there. So very simple, looking up at the upper time frames, looking for when it's consolidating and waiting for the breaks. Just a quick look at the euro. Okay, I mean, there was a descending trend line coming down off this point here, where it just broke to the upside. You could be looking for those, but as I said, I prefer the flatter ones, where it's a relatively flat market, and ideally I'd like the price to be moving off it quite quickly. So there's stuff going off here. It's not flat again. It's possibly a little bit flatter across there, and it's just looking for the flatter. As I say, I prefer the flatter looking moves. Not all of them are going to work particularly wonderfully, but there's a reasonable chance of them getting some decent movement once they do go. Some of them do go in the sort of Asian session. They break through lots of points here, upper touches, and then eventually break, retest, and off it goes. So we're seeing those now. Obviously, seeing them on the shorter time frames as well, but the hourly time frame is going to give you a bit more bang for your buck. I mean, right the way across here, actually, the lows from yesterday eventually just ran through those lows, bang, and produced a 20, not a massive move, but that 13 pip move there. As I say, the last few days it has been very, very lacking the volatility at times, but you're still getting some decent moves in this market. Okay, let's just pause. Right, so moving on to the next chart. Other options to be looking at is the time you're trading in, trading between sort of the key periods. I prefer to trade between 7 and 10 in the morning, and then probably about 1 and 4. There are a few times with news is coming out at 10 or just after, it may be worth hanging in for some extra volatility, but just choose your periods. Other key thing is walk away and leave the trade. A lot of people sitting there in the trades watching them. The best thing is if it's a good setup, walk away and leave it. The thing is, we've seen the market move in like 12 pip ranges for most of the morning, and just to sit there and watch a trade moving 3 or 4 pips of those 12 pips, it doesn't do you any good. The temptation is to fiddle with the trade instead of just letting it work. If the setup's good in the first place, as I say, walk away and leave it. Of course, trade off the bigger time frames. If haven't got the volatility on a short time frame, you just work up a couple of time frames. Day traders, as we're saying, 5-minute charts not always going to be appropriate. It may become you come out to 15 minutes. In fact, when we very first started the Forex room, the shortest time frame really we've traded from, because the volatility of the markets at the time was 15 minutes, so we were running off 15-minute charts and often looking even at the hourlies. It was only when the volatility really picked up we ran down towards 5-minute charts. So certainly that was something we used to do. Mix it up with swing trading, something Charlie does a lot in the accounts he's managing. Is to bring in quite a few swing trades, and it's certainly something I'm looking at in some of the analysis I've been doing, even if it's intraday type swing, but again running off hourly charts. Adjust your targets. If the market's only moving sort of 70-point ranges or 60-point ranges, and strategies may need to be realised to the targets and the possibility of the market. Okay, other options, looking at other things to trade. The futures, ES, S&P's futures has an average true range of about 170. It was over 200, but the Dow, the gold, 150, and then looking at other currencies. I mean, a pound, yen. Look at currencies such as US dollar, CAD can move pretty well, Euro CAD. So looking at some of the cross pairs here. And they're all with the major currencies, but crosses, and they tend to be relatively safe, relatively decent spreads. But even if the spreads are slightly wider, if you start swing trading some of these as opposed to just looking for intraday or short-term intraday, you can do quite well. Now, Charlie, actually, this is Charlie's slide. He found plenty of trades when he went off these. So. The one other advantage a lot of people overlook is with low volatility for swings, you can get away with smaller stops. It goes away with, also should be adjusting your targets, adjusting your stops even on intraday trades. There's no points if you normally use a 15 or 20 point stop. You may consider bringing it down accordingly. Okay, that's it. Sorry, there was a couple of things we just added on the couple of points in terms of where different ways of keeping in touch with us. EasyTrade.com, everyone knows, I'm sure, but we have got Facebook and LinkedIn. We're on LinkedIn as well, so a few other ways to keep in touch. Okay, that was that. That was all I wanted to cover. Is, as I say, very high level, very quickly. Just run through how to trade in low volatility markets. Hope you find it useful. Have a great day. Bye for now.